Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we're here with a Forex market analysis for March 31st. Can you believe it? The first quarter is coming to an end today. Really quick, when I show you our disclaimer, just to remind you that this video is for illustrative and educational purposes only. And also, if you haven't done so already, please subscribe to our YouTube and Twitch channels, and don't forget to share and like them as well, and hit the notification bell so that you are alerted to when we go live. And with that, we're going to jump right into our analysis. So we have the forex-trading-unlock.com website pulled up, and already from the navigation bar, hit the workstation tab, and we're going to go past the numbers. The big number is really to watch. The rest of the week is going to be tomorrow. Retail sales in in Germany is going to be big for the EU. CPI for the Swiss also could have a little stir. One of the other things that really matters, though, is we have initial jobless claims for the United States. This will be interesting to see if we start to see a downtick or not. Spring hirings, can they start to absorb these claims? We shall see. All car sales, that's also, and truck sales, that's also a big thing that we want to watch out for. And what else? Then we also have the ISM manufacturing PMI. Those are other numbers too that are going to be very big. On Friday, it is Good Friday. Most markets are closed except for the currencies. The unemployment rate, that's going to be the key number right there. Right now we're trading around 6.3% supposedly, and we'll see if we can get that number down or not. All right, we have the dollar index chart already pulled up. Yesterday it moved into higher move high territory and is definitely pressing this rally currently going on. So dollar strength is out there, even though we have so many dollar bears out there. It's amazing how many people are really bearish to dollar right now. So with that, let's go on to our currency analysis and see where we're going. So the euro US dollar. As you can see, it made a lower move low today, and it is now trading quite positive on the day. Now, the interesting thing enough is that we definitely have a downtrend confirmed. We had made this low here, made a lower move high, lower move low, lower move high. So what are we looking at here? Well, right now, definitely, as far as an upside breakout level here, you'd want to be playing off this $19.91 area. Anything above this would have this market in neutral to higher territory, pushing an upside correction. Overall, right now, with the lockdowns and the slowdown in the European economies, the euro is under pressure. So, and especially with the interest rates where they're at, and a few other fundamentals that are going on in the marketplace as well. We do, though, have a potential short-term buy signal forming here on the daily basis with the euro. Remember, the euro is the #1 component in the dollar index, and if we have a turn in, say, this, and also some of the other stronger ones, like the pound today, then we may start to see the dollar retreat versus most of the currencies, which it already is today, except for a couple that the dollar is exploding higher, and we'll get to that soon. But overall, the trend right now is lower for the euro US dollar. We're going to watch how this unfolds over the next couple sessions, and as we head into the second quarter. Cannot believe that we're already going to be in the second quarter starting tomorrow. But yes, we have a short-term buy signal setting up. It has not occurred yet. You're going to have to wait for our webinar later on tonight or tomorrow morning early to confirm these buy signals, or this buy signal. Now, just to give you an idea, just in case that this market does settle about where it's at right now, we're going to use that $19.91 high up there. So then I would say that you have a good chance to pull back to this area right here. All right, let me get rid of this Fibonacci. All right, this is clear here. So as far as a short-term corrective move, you can see how this had become support, and then it failed. So this would be a good place to find a moment of potential short-term resistance. I think you could probably get actually above, all the way up to around $1.19 even. That's where I think you're going to start to run into troubles, especially if this market's going to continue to maintain a bearish trend overall. But short-term, we do have a potential buy signal setting up. Remember, this will be a counter-trend trade. The trend right now is bearish. Let's go on to the British pound US dollar, which is also showing strength today versus the dollar. Now remember, with oil prices being where they're at, the pound definitely is hard for the dollar to beat up. Unless there's a big sell-off in oil, it's going to be most likely that the pound is going to tread water and continue to go at least sideways. It has been making lower move lows and lower move highs, so the key would be if we can break out to the upside, first of all, by the high from Monday, take that out, and then even bigger yet would be back over here. So only if we take out the second high over here, let's get this a little better there, would I start to become bullish overall. Remember, the trend is overall bullish on the long term and medium term. Only on the daily and hourly is it a short-term bear. This is a correction right now. It is not a confirmed bear market. It's just a bearish correction. So if you look at it on that kind of a base point, and we actually did have a piercing line buy signal right here. So how high can this go? Well, let's see. We're going to just do with the 50% rule here, which is always a fantastic leveling target. All right, there we go. Okay. So as you can see, we have the British pound US dollar targeting just below these highs here. So if we break out to the upside of Monday's high, we could still see a challenge of $1.3956. Only if we take out $1.4018 will we start to really get bullish, confirming newer move highs and a run for probably 142 and 143 even in the longer term. So short run, we are a buyer, looking for a challenge of $1.3956. Like I say, I think that's about where you're probably going to run out of gas. The only thing would be is if we have a big rally in oil over the course of while this is trying to beat through resistance. If we do, and you start to see oil get back to that $65, $66 a barrel range, then I think it'll be hard-pressed to not see the British pound make new highs versus the US dollar. That doesn't mean that the euro is going to follow with it. We have a disconnect for a lot of these currencies. Okay, so there's our targets for that. Let's look at the US dollar Swiss. All right, US dollar Swiss. This thing has capped out today, making a higher move high, slightly lower on the day. This thing is a bull. Higher move highs, higher move lows. With what's going on with the lockdowns and everything else, it's really hard, considering that this is a flight to quality currency, since it is trending this poorly, falling to the dollar. It's going to be hard to really stop this momentum. I think that we have a good chance at having a correction. And we can go right here. So short run, I think you could probably get back to this 93.20 area. And then maybe start to fall a little bit below that. If the market's going to stay strong and an aggressive bull, you'll probably stay above this 93.27 area. Only if we get a failure from this low here do we become bearish. Anything else is most likely a break to buy as far as the US dollar Swiss. Now, as far as upside targets, I've got 95 even as a good upside target in the longer run. Are we due for another sell-off? Nah, anything can happen. So we'll see what happens. If the dollar does start to fall under pressure, if oil starts to retreat, meaning going down in price, and there's a couple other factors, then we may see a sell-off in the US dollar Swiss. But with high oil prices, with the interest rates on their lows trying to push higher move or higher rates, the US dollar Swiss correlation right now is under pressure, meaning that the Swiss is under pressure, not the dollar. And especially in lieu of the severe lockdowns that are imposed in the EU, which have definitely seemed to be kicking back up in gear again, once again. So we'll see what happens with that. But right now we are bullish, aiming towards 95 cents. Only a failure of 93.27 would start to become somewhat bearish, and then really more. It's if you have to fail at 92.11 for us to really become an overall bear. Otherwise, right now we're looking for a break to buy. All right, US dollar JPY. This is going the same way as the Swiss. It fell just shy of our 111 target. Now, we've had 111 as a target for a while. However, we thought that it would take probably a few months. We blew through our 108 108.5, 109 even target. So that was something that we reached much sooner than we thought. We thought we wouldn't be hitting that until about where we're at right now, like this week, going into next week. Once again, with 111 being a target that we wouldn't really see until another like few weeks at least. So this thing is definitely a runaway bull. Do not fight this. I am just telling you, until you get a sell signal and then find a break to buy, I would say try and trade this from the long side. Do not try and fight this market. One of the things you have to watch out for especially is oil. If oil continues to stay high or neutral, this is bullish to US dollar yen, as well as gold. If gold continues to test support, then it's very likely that the US dollar yen will continue to pierce through resistance. So we'll see how that manifests. Right now we do not have a sell signal. Our longer term targets is 113.20 and 114 even in the yen, but these are targets that we have on a longer term basis. The reality is with the momentum that's in place, we could be there in a couple days or in a week, or we could be there in a couple months. So we'll see how things happen. If the dollar starts to take a turn, like I said, it looks like, at least in the short run, while the dollar index and the dollar is a bull, it looks like a lot of the currencies want to pull back on it. So a little bit of a mixed bag of goods there. Australian dollar, US dollar. Oops. So the Australian dollar, US dollar, as you can see, has been making lower move lows and lower move highs. We had a head and shoulder pattern that was confirmed last week. This neckline was taken out last week, and as you can see, we're bobbling below it. It's a little sideways. I think that has to do with oil. If oil gets a tank, if they start to tank, and if gold continues to make new lows again, then that would be probably negative for the Australian dollar, US dollar, at least in the short run. We're looking for a test of 75 even right here, down to 74.5. Nothing really major, but we are looking for this correction to continue to trend lower and then start to set a base. Once again, I don't think you're going to be able to oversell this market too much because of oil, so watch the oil trade. If oil starts to rally again and gets back to the mid-60s, it'll be really hard to have Australian dollar not make higher move highs. But we do have the sell signal from the head and shoulders. We will see what happens. Now the New Zealand dollar, US dollar, New Zealand dollar, US dollar. New Zealand dollar, US dollar has already fallen through support. It continues to press its trend lower and now is consolidating. Does it have more room to the downside? Yeah, absolutely it does. But like I said, the same thing applies to the New Zealand dollar as it does to the Australian dollar. Because of the oil trade and the gold trade and stuff like that, it will be hard for New Zealand dollar, US dollar to sell off more than it already has. Not that it won't make new lows, but I don't think you're going to see significantly lower move lows, especially over the next couple of weeks to even couple months. The only thing that would do that or change that scenario and have the New Zealand dollar, US dollar becoming a really, really big bear would be if oil prices absolutely just fall through the floor. And also interest rates would have to go down too with like the 30-year benchmark. All right, let's look at the US dollar Canada. So the US dollar Canada right now is giving us a little bit of a sell signal. That is not actually kind of unexpected at all, because if you look at how we've been trending, it's been a bear market, not severe. As you can see, lower move high, lower move low, retracement, lower move high. We start trending and we make lower move lows. Now we've done the same thing, retracement, and we have a potential sell signal forming right here. This would be a bearish engulfing line. Should that occur, we will be looking for the US dollar to test support down below 124 even, all the way down to 123 to 122 half. So right now we have to be kind of critical of what's going on here. The main upside breakout level would be right here. Anything below here keeps us in a negative way. Okay, what happened there? Oh, there we go. All right. Okay, so there you go. We have the potential self signal forming here. We will get into that one tonight or tomorrow morning, depending on when it manifests. We have to wait until the end of today's U.S. session. Now, remember, we are coming into a shortened market. holiday market. It's an Easter weekend. Doesn't matter who does or doesn't celebrate it. The stock market in the United States will be closed on Friday. So are some other markets. Currencies will be open. Volume will be thin. Be very, very cautious about trading in these holiday markets. Good things do not usually happen. So if you're looking to ruin your holiday or your weekend, I would say then go ahead and trade at will on Friday. But if you stay away, you're probably going to be a much happier person than if you waste your time to begin with, because volumes will be thinning. Remember that Europe will be coming offline and getting ready for the Easter holiday as well. So I would expect the volumes from money managers across Europe and stuff will be rather slight as we start to taper off into the end of the week. Tomorrow's unemployment numbers are big, like we mentioned at the beginning of the webinar. Those are things the whole world is watching. I think once those are done and you have the initial reactions, that then trading will start to dry up. So we're looking for a sell signal here in the US Canada to come to fruition. Let's look at the US dollar Mexican peso. For those of you that are still planning on going down there, as everything is opening up, this market has been making higher move highs and higher move lows. However, as of late, it made a lower move high. So the question is, can that high be challenged, or is this low going to be tested? A failure from here confirms newer move lows and a bearish trend, whereas a rally above here confirms higher move highs after then a lower or higher move low. That would keep the trend intact. Overall, I'm looking for this to be sideways to higher, especially as travel opens up, and see the peso probably get back up above 21.5 towards 22 pesos to the dollar, and then pretty much just swing around there. I'm looking for it to be like basically 21.25 pesos up to 21.75 as a choppy range, and then having 22 even being the extreme for any rally. Let's look at the euro US dollar real quick once more. As you can see, our buy signal, our piercing line is still forming. We will see what happens. We don't have any questions on the chat box, so what we're going to do is we're going to remind you one more time to subscribe to this YouTube channel if you have not already. Pass it on to your friends, like and share it, and also don't forget to hit the notifications button, and then you'll know when we're coming out with our next video. So good luck with all your trading. Do remember, guys out there, that it is going to be a holiday market on Friday. So after unemployment tomorrow and midday tomorrow, things may start to really dry up. So if you got plans, if you want to play hooky on Friday, I think that's a really good idea. I know I will be. All right, take care. Thank you very much. Once again, I am Teddy Keckstedt from Forex Trading Unlocked, and you can check us all the time at Forex